Okay, welcome back. Happy Monday. All right, so we're getting ready. The market's going to open up any minute now. I am continuing with my 20 trade exercise taken from Mark Douglas's book, Trading in the Zone. I've decided to trade the 9 EMA. I wait for the first 30 minutes of the market just to play out. And obviously, we had a big move overnight due to us and the communist Chinese coming to some kind of agreement on trade and tariffs. This is a very dangerous kind of thing to trade into. Now, during this whole tariff thing, I stayed away from trading for a couple of weeks, and the market's open because it was just you couldn't. The technicals um, didn't matter really because anytime someone somewhere opened their mouth up and said the word tariff, the market could go either way depending on what they said. Um, so before I stopped trading during this whole tariff thing, I took $1,000 loss in like 20 seconds because I had my setup. I waited a few hours for my setup. This was back in April, early April. I waited for my setup for a couple hours. It appeared. It was going good. And then all of a sudden someone said something about tariffs and the market went in the opposite direction in 20 seconds and I had to get out because I didn't know how far the market was going to go down and I lost $1,000 in 20 seconds. So I stayed out of trading during this whole tariff thing. And now the same thing is today because this move overnight, as you can see here in the shaded area, this is not based on technicals. This is based on the tariffs coming to a conclusion apparently with China. Now people might say, well, yeah, I mean it is technicals because now we're going to be trading back to our highs. Now that we've come to some kind of agreement with China on trade and tariffs, it makes sense technically that the market would start heading back to its all-time highs, which which should be up here on the SPY. I'm on the SPY here. It's a 613. So here's all the tariff mess here, and we've been slowly creeping back. And now we had this big move overnight. So you would think technically you can make an argument that the technicals are coming into play because trade deals are happening and we're going to get back to our all-time high. But you can make that argument, but I don't feel that way. And I just I want to be cautious because you could see what's happening. We had this big run up overnight, and of course, you have this big move down right at the open. I don't want to get caught in any of this, so I have to be very careful about what I do today. So, working the strategy I'm working is trading the 9 EMA, and the strategy that Mark Douglas says you should choose should have no subjective elements to it. Should be completely objective. Your setup hits, you take it and you manage it with your risk management. So the strategy is two green candles above the 9 EMA, which is this blue line. I buy calls. Two red candles below the 9 EMA, I buy puts. And I've been buying 5 puts near or at the money. On a Monday, I'll do Friday expiration. Probably Wednesday, I'll do Friday expiration. But on Thursday and Friday, I'll do the next week's expiration. So now it's highly likely you're going to have two red candles below the 9 EMA. But as I said, I don't want to trade the first 30 minutes of the market. I want all this nonsense to work itself out. Um, so I started last week. I took a total of 8 trades. The strategy is for the exercise is for 20 trades. So I have 12 more trades using this particular strategy. And I totally screwed up last week. If you saw my previous videos on this, Thursday I shut down too early and I missed a run of at least $1,000 or $1,200 in profits. Um, Friday I had a bias of going long because buying calls because the market has been in an uptrend. I didn't want to go short, and I ended up missing out on a short trade that was just absolutely perfect, and I missed out on a $700 profit. So really, if I had followed what I was supposed to do, which was the entire point of Mark Douglas's book Trading in the Zone, is to eliminate emotion from your trading. And I totally screwed it up by not taking the trade when the trade setup appeared. And I had a bias. So instead of having a positive $2,000 profit week last week, I I ended up about $220. So so here we are today. Market is open after a big gap up overnight. We'll see what happens. I'm probably gonna have to use hard stops today because I just don't feel like the technicals are in play today. I think it's all tariff related, and I don't want someone throwing out a Twitter post, whether it's Trump or someone else, um, causing the market to go drastically against me in a matter of seconds, and I don't have a hard stop order in. So I'll probably, usually I don't use a hard stop, but I may have to do it today just to protect myself. All right, so we'll see what happens. All right, the first green candle has closed above the 9 EMA. However, we are not a full 30 minutes into this market, so I'm going to have to make a decision here. Plus, it looks like this is getting away from us. um, but I will take the trade if this green candle closes above the 9 EMA as well. And it would have to be a green candle. A red candle closing above the 9 EMA after this green candle, that is not a trade. Got some selling pressure coming in here. Okay, we didn't get that second green candle. However, we did get the first red candle below the 9 EMA. So if we get another red candle close below the 9 EMA, we will be going on the short side and buying puts. Let's see what happens. The good thing about these videos, is if you're just starting out and you want to decide, do I want to do this? You could sit here and watch me back test this for you using my money. And you could see how things work out for me. And we're getting close here to this candle closing below the 9 EMA, and we will be going short by buying puts. Looks like this is going to close red below the 9 EMA. Now, there's no emotion about this. There's no thinking about this. And there we go. All right. We just bought 5 May 16th, 579 puts on the S&P 500. And whoops. And we bought them at 473. So I'm only willing to risk $200 on this trade. The trade cost me 2,365. So if I go red $200, I'm going to get out of this only because of um, that's what I'm willing to lose. If I get to 533 on the call, it'll be a $300 win, and I'll get out at that as well. All right, I got out of that. I took a loss on that one. Took about a $200 loss. I'll wait for the next setup. All right, I took a $146 loss on that last trade. I'm not going to sit in these things. I don't want to take big losses because the market can move fast on all this tariff stuff. We'll see. I'll wait for the next setup. So far, nothing's showing up. All right, we had one green candle close above. All right, looks like we're going to get two green candles close above. And we'll be going long, buying 5 calls, May 16th, 585 calls. And we did. All right, we are in. I'm sorry, it was 581 calls. $581 calls. 581 calls at 443 was our purchase price. We have $2,215 in the trade. We're looking to get out at 503. It'll be a $300 profit. And 403 will be our stop loss. Things are moving in the right direction. And we are currently above VWAP, which is this yellow line. And we're holding it, which is that's a good sign. All right, we had a red candle close below VWAP, but above the 9 EMA. So we're staying in this trade right now. And we haven't hit our stop loss of 403. Bid is currently 416. It hits 403, we're going to get out. All right, we're battling back. We're about break even right now. We're back in the red. This is what trading's like. This is it. It'll drive you crazy. Okay, hit my stop loss on that one too. I had to get out. Had to get out. That's the way it goes. Lost 200 on that trade. And it's a good thing I got out, because you can see now the market's going lower. So my rules are 3 losing trades in a row, I'm done for the day. So if we get another red candle close below the 9 EMA, I'm going to go short. I'll buy 5 puts. We'll see what happens. That's just my rule. Three losing trades in a row. I'm done for the day. I got to pull a goalie. It's not his night. Close up shop. Tomorrow's another day. I take my losses, and we go from there. All right, I'm long 5 puts at 428. The 577s. Market is looking weak. We'll see what happens with this trade. All right. I took my 3rd loss for the day. That's it. That's it. All right. I'll recap everything in a minute. And see where I'm at. But 3 losses in a row. My rules are I shut down for the day. Okay. Here's my 3 trades I took today. 512 buy to open 5 puts. Closed 5 for $146 loss. Next trade, bought 5 calls. Closed them out for a $201 loss. And then the final, bought 5 puts. Closed them out for a $226 loss. Total loss today, $575. So that's 3 more trades I took out of the 20 trade exercise. So that's 11 total. Got 9 more trades to go. I am now in the hole for let's see, total overall minus 351.62. All right. So that's it. We'll see what happens tomorrow. Subscribe to the channel. Give it a like if you will. And I'll see you in the next video tomorrow.